So here are Snap's quarterly financials. Difficult to get much of a trend because frankly they are losing a lot of money, but this was Q2 2019, 388 million in revenue and 305 million in losses. But if we take out the losses for a second and just look at the top line and the gross profit, you'll see that Snap's business is improving rapidly. The fundamentals, they're seasonally strong in Q4, so that's why you have that bump of 390 million, but you can see the year-over-year growth for Q2, 48% growth year-over-year. I mean, this is a rapidly growing business, and that revenue growth rate's actually accelerating now that user growth is back up. So we have a rapidly growing top line. Even more exciting than that is that gross margin line there, 144% growth because the gross margins are improving so rapidly. And that's the key part of the thesis I want to get to. We've hit this inflection point in Snap's business where originally it cost them so much to run this complex video AR platform that they weren't even making money serving you ads, which should be an extremely high margin software business. This is one of my main critiques of Snap is where is the gross margin? Facebook's putting up 70, 80%. So's Twitter. So's every other software company. If you're going to be valued like this at 10 times sales Snapchat, we need to see the gross margins improve fast, and they have totally delivered. So not only are you getting rapid top-line improvements, but you're getting rapid gross margin improvements, and this is the underlying profitability of the firm has been crushing it because of this. So you can see it was 44% in Q2, but seasonally Q4 is even stronger. So I think by Q4 20 of this year, we're looking at well over 50% gross margins for Snapchat, and they're going to continue to go up. The other thing is they've stopped burning through the IPO cash. So if you look at this is from their shareholder deck, you can see their free cash flow has shrunk dramatically. So yes, they are still losing a little bit of money, but way less. They're being extremely prudent with how they manage their cash, and you can see that they've totally stopped burning through it. They still have 1.2 billion left on the bank, only burning about 100 million a quarter and diminishing. So now they have about 3 or 4 years of runway left at the current runway, which I think is going to improve. So the cash position is extremely strong and secure as well. So now we have this combination of, crushing at fundamentals and, rapidly improving top line, rapidly improving profitability, and no longer the need for cash. And part of the reason you're like, wait, how are they losing so much money, 305 million in operating income, but only 100 million in cash losses? 200 million of that is in stock comp to employees, depreciation and amortization of CapEx. Those are non-cash expenses, but you are paying for them in terms of dilution. So that's why, the share count is going to be increasing for Snapchat as they give employees more options. That's why I think when you're valuing the company, you want to assume a pretty, good, decent growth in the share count. Anyway, before we do that, I just want to give you guys my brief estimates for 2019, and actually shout out to HyperCharts. If you want to get down and dirty with all of this data, go to hypercharts.co/snap. I'm actually going to put out a model of my Snap estimates in another episode on HyperCharts, so more on that later. But anyway, back to the charts now. This is what I'm projecting for Snap for 2019, about 1.75 billion in revenue and about 950 million in operating losses. So as you can see, the losses are improving, a little bit, and the top line is accelerating in growth. And that's what really has me excited about this company is the growth is back, and the revenue is booming, and we're looking at 1.75 billion. So now let's talk about the valuation. With about 1.6 billion shares outstanding, at 17 a share, because I actually bought the shares at 17 a share, so even though they're at 14 now, even cheaper, let's just do it at 17. The market cap is about 27.2 billion. Actually, side note, that 1.6 billion shares, that's more than they have outstanding now, but I assume that, 100 million or so buffer for that future dilution, for another equity raise, for an acquisition, etc. I always think it's nice to leave yourself a buffer when you estimate the shares. So $27.2 billion company, 27.2 billion divided by 1.75 billion in 2019 revenue, 15.5 times price sales. So why would I pay 15.5 times price sales for this company? The gross margins, 45-50%. They're only growing at 48%. What's going on here? The biggest reason is I think the financials are drastically lagging. This is something that I saw with Facebook. When they started clicking and the margins started happening, all of that incremental cash flow went right to the bottom line. We saw Facebook be extremely profitable. We saw the market not really realize this until the numbers hit. When the numbers did hit, the stock soared. The rest is history. It's worth hundreds of billions of dollars. I think Snapchat has actually very similar, attention to these networks like Twitter and Facebook. Think about it, 203 million people checking it every day. That's already bigger than Twitter, yet they're valued at about 2/3 of the price. And so I think and they're growing much faster. So I think the attention on Snapchat is probably worth 40 or 50 billion if it was a mature advertising business, but it's not. So that's why the market doesn't appreciate it yet. But then I think if you assume that Snapchat keeps growing, if they have another product innovation that hits, if they continue to steal momentum away from Instagram, if the debate goes more onto privacy and fun than likes and sort of Zuckerberg's empire, I think Snap is the beneficiary of all of this. And so I think we're going to see 48% 20% revenue growth is great. I think they can continue at that level for several years. All the multiples are going to compress rapidly. All of the incremental profits are going to go right to the bottom line. We're going to realize this is an extremely profitable business on a revenue basis. And so I'll get more into this in my financial modeling episode and actually show you guys the numbers I'm expecting. But the point is I think Snap is sort of at this inflection point where they figured it out, the business model, the advertising model is working, and we're going to see the financials start flowing in the next couple of quarters as long as the user growth is there.